This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 4th, 2015. Euro dollar. So the euro continues its impressive recovery run out from those 108.19, 108.20 lows from the other week, and the market now breaking back above 12.10 takes the immediate momentum off of the downside and potentially suggests this market could trade higher back towards the critical lower top that's sought out at 14.67. At this point, though, we're still looking for the formation of a lower top, and while the market holds below 14.67, the bearish structure remains firmly intact. If the market does break above 14.67, this would open a significant shift, but again, until then, there is the risk for a lower top and bearish reversal back below, back towards that 108.19 recent low. At this point, short-term support comes in at 110.80. That's the low that we saw on Wednesday, and a break below this level will do a good job of strengthening the outlook and putting the pressure back on the downside. Sterling dollar. So not much price action going on in cable over the past session, with the market just consolidating a recent bounce off of the lows that we saw from earlier this week around 150, 170. At this point, the downtrend remains firmly intact on a medium-term basis, and after the market stalled out at fresh 2015 highs at 158.15, there is risk for deeper setbacks towards next key support at 150.89. At this point, rally should be very well capped ahead of 155, with only a break back above 155 to take the pressure off the downside. Dollar yen. So dollar yen is stalled out in recent trade after recently breaking above to fresh multi-year highs above 125, stalling out at 125.05, and this set up earlier this week a bearish outside day formation, which warned of the potential for some consolidation or a bit of a pullback. At this point, we've seen more of a consolidation, and the bullish structure remains firmly intact. Any setbacks that we do see should be very well supported by previous resistance now turned support at 122, with fresh upside eventually seen above 122.05, above 125.05, and towards the 126 to 127 area as the next stop. Ultimately, the structure does remain highly constructive, and dips should be very well supported. Euro Swiss. So an interesting development in Euro Swiss on Wednesday, with the market taking out key resistance at 105.25. We'd been looking for the formation of a base and a higher low around the 103 area above that 102.35 low that we saw back in April, and this was confirmed with the market clearing above 105.25 on Wednesday. The break now opens the door for fresh upside towards the 108.15 peak that we saw back in February. At this point, any setback should be very well supported ahead of 104. While ultimately only back below that 102.35 low that we saw from April would compromise the recovery outlook in Euro Swiss. Aussie dollar. So Aussie is locked within some consolidation over the past several sessions, though the market is clearly also within a well-defined downtrend, and the focus now is on a break of the recent yearly low and multi-year low at 75.33 going back to early April. At this point, any rally should be very well capped ahead of 80, with deeper setbacks seen in the coming sessions. A break below 75.33 would confirm a medium-term lower top at 81.63 and expose the 70 area further down. Dollar CAD. So dollar CAD has done a really good job of recovering over the past several days, with the market looking like it wants to put in a higher low at 1920 ahead of the next major upside extension to be confirmed on a break of the yearly and multi-year high at 28.35 going back to March of this year. A break above 28.35 would then expose the 2009 peak at 130.65 further up, and any setbacks now should be very well supported into the 121.50 area. Kiwi dollar. So Kiwi remains pressured to the downside since breaking below that previous base at 71.76, and this has opened the next major downside extension towards the 65 area further down. A lower top is now in place at 77.44, and any rallies in this market should be very well capped ahead of 73 in favor of additional declines. SPX 500. So the S&P 500 has been stalling out after recently posting record highs at 21.37, and the market looks like it could be slowly carving some form of a top. A break below recent lows that we saw around 2100 would be required to accelerate declines, while a drop back below 2040 would do a good job of confirming a major top in this market. Inability to break down, followed by a break back above the record high 2137 would negate, of course, an open fresh upside. But again, with a contraction in volatility seen over the past several weeks, the market is warning of a breakout, and given the record high elevated levels, this breakout could be to the downside. Gold. So gold continues to be very well supported on dips above 1170. This is the key level of support right now. And while the market holds above this level, there's risk for additional upside back towards recent highs at 1232. Overall, it looks like this market could be carving in a longer term base off the 2014 low around 1130. And the market again will need to hold above 1170 to help strengthen this outlook, followed by a break back above 1232. A push above 1232 would open the door for an acceleration of gains above 1300, but again, a close back below 1170 would compromise the outlook and put the pressure back on the downside in gold.